Hit it.
It's Friday, August 5th, 2022, episode 190. I'm Patrick Serezna.
And I'm Kevin Muir. This week, we welcome back to the show Boris Schlossberg from BK Forex. We talk about anything and everything with Boris sharing some great nuggets of trading wisdom, along with some banger trade calls that you don't want to miss. Then Patrick pulled out his box of crayons to explain what the heck was that big red line in today's charts at 8:30 a.m.
We then end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. What beer are we drinking in a normal hour of the day?
This week, you're drinking Bohemia Pilsner. I think this is from Czech Republic.
Yeah, and I'm drinking it in Mexico.
You're drinking imported beer in Mexico.
He's like the international.
You know what?
Man
It was
mystery.
desperate times because you know what? Kevin ran out of beers, and I had to come up with something on a short notice. So this is what they had at the hotel. So it is what it is. But do you have something on it?
Yeah, so bright and golden, this is the queen of the Bohemia line. It's a robust Pilsner style beer that has been created using only the highest quality ingredients from around the world and a fine selection of hops that are sourced from the Czech Republic. The hops provide a strong, bitter taste as well as an irresistible herbal aroma. Its full body is so complex that it can be compared to a fine wine.
Ooh.
Yeah, that's what they all
Well,
say.
you know what? It just it tastes like a beer to me, not a fine wine. So, but
After a few, it might
exactly.
start to taste like wine.
We'll rate it in the after show. All right, Kev, give us some side effects, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include acid-backed seizures, bond quality disorders, fixed income mutations. I think that was a bond trader that made that one.
Yeah, there you go. That's awesome. All right, let's get Boris on.
All right, welcoming back to the show, Boris Schlossberg. Now, when we were practicing before, you told me that there was no way that I was going to get it right, that I would be not from New York. Boris, how am I getting it wrong?
You're making too many shushes. It's Schlossberg. There's no second shush in the two S's, but that's very hard to do.
Making too many shushes. Boris is from BK Forex, and we've had him on the show before. And I don't know if people will remember, but you were the fellow that told us the story about seeing. You went to school in Colombia and you saw someone rolling up a dead body in a
dead body in a carpet. That was your favorite story, man.
It was.
You know,
It's still.
I didn't know.
For anyone that has not listened, go back and listen. It's still one of my top 10, not even top 10, top 5 kind of market huddle moments where Boris explaining to us that he sees someone doing the old Goodfellas with the body.
That's right. You know, that's why when people say to me, "Oh, it's the '70s inflation, it's the '70s crime wave," I'm like, "Dude, I lived through the '70s. Let me tell you, this is not even close." You know, it's a much more benign version of it. You know?
So until we see bodies getting sent out in the dumpster and the rolled up carpets, we're not there. Okay, so there's a lot to talk. There's a lot to talk about, Boris. Why don't we just jump right into it? Payrolls just blew the doors off. Like,
oh wait! I thought we were in a depression. I'm sorry. I'm paying attention. I'm paying attention to the University of Michigan, numbers, and apparently we're in a worse depression than we were in 2008. Except I'll tell you this: I went to the Woodbury Commons, which is this very, very big outlet mall, maybe an hour outside of New York, that everybody goes shopping to. I was there last weekend, and I'm not kidding you. I've gone there for 20 years. I don't think I've ever seen more customer demand and just people literally, like, there were lines upon lines, and not just in the high end retailers like LVMH and all the other ones, but like Crocs, there was just lines that people had lines outside the store. So yeah, I think we're in a very strange economy where for the top 20%, it's literally never been better. Literally never been better. I don't want to hear anybody crying to me. Every small business owner that screaming to me about inflation is also complaining about the fact that they cannot satisfy demand. But it's certainly obviously very painful on the lower end of the scale for the other 20%. And that's why you have this incredible dichotomy in sentiment versus income. And even like Matt Klein had this amazing, interesting point where GDP contracted, but GDI, the income for the country, accounting for inflation, that is, accounting for the CPI, actually increased, which I think kind of explains, this crazy economy where we have massive demand, but the GDP itself, contracted because of an inventory overhang.
And you kind of touched on
crazy.
the fact that people are extremely bearish, pessimistic. I was looking through the AAII survey.
Yeah.
And I was looking at the numbers for that, and I realized I kind of went over the last couple of months, and it was actually the investors were more pessimistic these last couple of months than they were during COVID. There was literally a pandemic shutting down the world economy, and they were more bearish this last couple of months than they were then.
I know. It reminds me of the old Richard Pryor line: "Who are you going to believe, me or your lying eyes?" I think basically what's happened is there's a huge political slant in economic analysis. And I used to get really, really annoyed about it. You and I are on Twitter all day long. We see it all the time. Until I realized, hell, this is just an incredible opportunity to make money. That people just simply, for various political reasons, whether they're on the libertarian end of the spectrum or on the right wing end of the spectrum, want to believe that this is the worst economy possible, when in fact, the economic statistics show the exact opposite. So that disconnect between investor sentiment and actual reality, I think, obviously creates some interesting, buy the dip opportunities, and that's why you see equities rally. Even today, we're like a massively strong number, and a really, honestly, just tough wages number. I mean, like if you thought inflation peaked, today's inflation number really kind of slapped me, silly on the face. Despite that, equities just kind of holding bid, because I think they're sniffing out the fact that the economy is not as bad as everybody thinks it is.
And I love the way you bring that up, the fact that there's an opportunity, instead of sitting there and getting all upset about it and trying to change people's politics or arguing with them about what is, you're just saying to yourself, hey, look, if this is what most people believe, yet I'm experiencing the opposite, I'm going to go take advantage of that. One of the things that kind of you touched upon earlier when we were talking before the show, you said something to the effect that you had, quote unquote, a come to Jesus moment about shorting the S&P.
Yeah.
Why don't you tell us what the vision was?
Well, here's the thing, and I think this is the problem of all. I don't want to use the word independent, people who think they're independent thinkers, people who think they're the smartest people in the room. And I, of course, put myself into that note of, you like to be contrarian, you like to be always on the offer side. Like I still remember just dating myself horribly when I used to trade Inktomy, right? Which is like a stock from the 2000s. It's
INKT, right? Have I got the symbol right?
INKT, right? Yeah. Right. Yeah, exactly. I think it's INKT Inktomy, right? Yeah. Trading Inktomy. And like this was a stock that one day, I mean, stocks used to go 10, 20 points a day all the time. And this was a stock that went 20 points that day. And I was on the offer the whole day. Literally, I did not make a single buy, and I made money. And I thought, oh, I was the smartest guy in the room because I know how to short stocks into the sell. And so, I've always kind of gravitated to the short, and I think people gravitate to the short side because they like to be contrarian, they like to be smart. And then a couple of years ago, I saw this really interesting piece of research from Crestmont Research. It's totally available on the web, and you can just look it up. I think you could just simply go Crestmont Research stock market yo-yo, and it's a very, very simple piece of research. It basically asks how many days during any given year, how many days in the stock market are up versus how many days are down, right? And it goes back to like all the way to the 50s, right? And of course, some decades, there's a big gap. Some decades, there's a smaller gap. The smallest gap, of course, was in the 70s when we had horrible, horrible markets. But even in that decade, it was like a 52-48 spread. Right. But in the last decade, it's literally been 60-40 spread. In other words, 60 days have been net up and 40 days have been down. And, when I found this fascinating because I was day trading and I was like, I'm shorting and I'm getting my ass kicked. And then I realized, the key to just kind of trading properly on a day trading basis is you got to buy the dips, not sell the rips. You gotta go with the rips and buy the dips. And when I changed that attitude and changed my orientation, about a year and a half ago, made a marked difference in first of all my drawdowns and just my overall performance. And I kind of realized basically, it makes sense from a micro point of view to a very, very large macro point of view. The U.S. equity market is essentially a bet on progress, right? It's a bet on technology, productivity, growth, wealth. And if you sort of believe that model, it's a naturally upward drifting model. I'm not talking about individual equities, which can go up and down all over the place, but we're talking about it as an aggregate basket. And I trade, obviously, futures, which are an aggregate basket. So if somebody said to you, you have a 60-40 proposition, and it was a 50-50 bet, you would be a fool. Anybody will tell you, you would be a fool not to constantly be a buyer. As long as you manage your bankroll correctly, you are guaranteed to make money, right? But so many people want to, sell the rip, sell the top, and also inevitably chase the bottom down. And I think, it's one of the most obvious things about equity markets that I think people completely underappreciate, which is that it's an upward drifting asset. And whether you are a long-term investor and you just dollar cost averaging, which is what you should be doing with your basic IRAs, just every single month, just buy, it doesn't matter. You're going to get a tremendously positive return that way. Or if you're, day trading like I am, positive skew is just a much better place to be, for a whole bunch of reasons. So that was interesting. And it was definitely a very much an awakening moment for me in my trading career.
Was there like a sound, and was there bright lights? Did you have a real
sound of bright lights? It was like I was like, I think it was after I got my face handed to me for yet another time trying to short a NASDAQ rally that I said, maybe I should try it the other way. And and I kind of did.
Isn't it Paul Tudor Jones that said something to why, you idiot, why are you trying to make your life full of pain? I think he said something to that effect. It was something to that effect. I think it's fascinating that you came to that realization. It's even funnier that you took 25 years. You're like me, Boris. You're still figuring things out.
You can teach an old dog a new tricks. You can. Absolutely. Oh, sorry. This end of the day alerts going off. I'm so sorry.
No problem. You got to make sure you are.
Speaking of which, NASDAQ and Dow rallying into the close, of course, as I speak, proving my point. That is a buy the dip, not a sell the rip instrument. There you go.
So let's talk.
I have nothing more to say, Kevin. The interview is over. I'm done.
It's that easy. Well, it is one of the things when you realize that the hedge funds, they're generally on the whole long, and the reason that they're long is because that you earn that premium. You earn taking the risk premium, and
yes.
It's
and if you ever looked at the alpha of the short side funds, it's basically a never-ending funnel of lost money. Like in other words, their argument is, I'm in the business to be an offsetting thing, and in the meantime, I'm going to lose you money 10 years in a row, and I'll make you a little bit of money on the 11th year. But it's like a boat, basically. I'm just going to, and people just allocate to them, I guess, because they feel that. I love Jim Chanos. He's an incredibly smart guy. I have a tremendous amount of respect for him, but I don't think if you gave him all your money for the last 20 years, you would have done really well.
I think you have to. His fund, I believe, the other side of it is long S&P, and that's where you make your money. And I guess you could argue,
right? That's fine. Well, he's a smart guy. That's why he's a smart guy, because he knows where the bread is buttered.
For sure, and he's a really, really smart guy. I remember reading one time Dan Loeb counseling Kyle Bass, saying something like, "There's no short sellers on the Fortune 500 list."
Yes,
that was his
comment. What's Kyle Bass has been short the Hong Kong dollar for the last 2 decades. And he's been short the JGBs, the Widowmaker trade, which has been forever. So
I was just going to say that one hits a little. That one hits a little too close to home. So we'll go on.
Okay.
All right.
Let's skip over that. Yeah.
So
I understand, but I feel your pain. I definitely feel your pain. Yes.
You're not a true macro trader until you've lost money trading JGBs.
Yeah. Hey, Kev, speaking of JGBs and just kind of Japan and everything else, so this just, I just thought of this because Axios put out a report today that I thought was really interesting. And it was like, is MMT right? Right? Was modern monetary theory correct? Or was it wrong? Right? And like the answer is yes and yes, which I thought was kind of interesting. Basically, so they were absolutely correct in saying that if you monetize debt, you can cure deflation, and you can create demand. And the COVID experiment certainly proved it in spades. But obviously, where they were wrong was that they let the inflation, genie out of the bottle. That now it's going to be much harder to control it. But like I think on balance, you kind of have to respect that they were absolutely correct in saying that demand is literally a function of more money, not necessarily, hard work and productivity, which is the Puritan ethic that we all like to believe in as a thing. Because since, if you believe that all money is fictitious and basically all economic activity is just a human construct, it can definitely be manipulated in a more efficient manner. So I just thought it was fascinating.
Boris,
I know you follow MMT a lot.
Yeah, it's interesting that you say that today, because I did get somebody tweet at me asking me if I've rethought my MMT beliefs. And to your point, first of all, everyone thinks that you quote unquote do MMT, which is there's no such thing. MMT is a theory, and you explained it almost bang on. And basically what it said was that the governments are generally not fiscally constrained. They're real resource constrained. And by real resource constrained, that means it's inflation. And therefore, if you print, not print, because it's important that the printing, the monetary, the kind of the money side of it, meaning like the QE and stuff, that's almost irrelevant. That wasn't the real kind of change that really
you actually
changed.
allocate. You fiscally spend, and the central bank buys your bonds. That's basically the model.
And I don't even know if the central bank needed to buy your bonds. I think you might have, even if you had done it without without the Fed buying, doing QE, it still might have worked. It still might have created inflation. But I guess one of my points is that everyone will say, look, you were wrong. And I go, no, to your point, Boris, they were correct. MMT was bang on when they said, if you spend, you can make inflation. And everyone has forgotten. Everyone has put aside the idea that they believe that there was deflation. Like I used to get told all the time that demographics, the amount of debt out there, and disinflation from technology would make inflation impossible. Boris, they told me it was impossible. Time and time again.
Correct. And all it took is a couple of paychecks in people's mailboxes, right?
Right. And I always said, no, if the government wants to and has the political will, they can always create inflation. So you're spot on correct that MMT was the theory was spot on, was correct in that they could create inflation. But I guess the point that I've always made is if you go read what I wrote about it, I said, be careful, it's coming. And the MMT folks will tell me that they're going to be able to control it and they're going to be able to pull it back. And I've always said, always, that this will result in more inflation. And I think we're getting that. And where I am actually disappointed in the MMT, I would say disappointed but not surprised, is the fact that they're trying to rewrite the narrative. They're trying to say, no, it's the supply side. It wasn't the fact that we spent too much. And that's bullshit. The reality is that they spent too much. They did too much.
So I partially agree with you.
Yeah, listen, one second. There's definitely supply sides.
It's definitely a resource constraint. I mean, we are in a resource constrained. We were in a resource constrained economy in 2021. There's just no doubt about it, right? We have to, because of COVID supply chain breaks, all the way down the line. And of course, your favorite topic, which is just simply a lack of investment into energy, and just sort of a nearsighted view or just an idealistic view of how energy policy really works. But we're coming out of that resource constraint at this point. In every single factor is showing you that there's just going to be more production coming out. And I think that naturally tempers the inflationary pressures, to the downside. So I definitely they're absolutely wrong in not admitting that it was resource constraint that hurt them. And you're absolutely right. It's probably the last paycheck that that they did was a little bit too much to stimulate the economy. But it's the bigger point is it's not just that it created inflation; it created growth. I mean, my point is we're literally in the best economy we have seen in 20 years. I know and nobody's going to believe me. That's probably the single most unpopular view in the world because everybody thinks that we're in a depression. Yeah. But I challenge you to walk into a restaurant. I challenge you to walk into a store. I challenge you to walk to any small business owner and say, "Oh my God, are you suffering? Do you have to fire employees?" And they go, "What the fuck are you talking about? I need more bodies on my floor than I possibly can manage." Right? That is not a sign of depression, right? And I think that's a function of MMT.
Yeah. Oh, I completely agree, Boris. And listen, I shouldn't say that I'm blaming it all on MMT because I agree with you that there was supply constraints that affected inflation. But at the same time, to just blame it all on the supply side and not to say...
I agree. I agree. 100%.
They should...
You're right. You're right. No, they overdid it.
Yeah.
They overstimulated.
They should just say it.
Right. No, they 100% overstimulated. But the problem is, the thing is, this was the first time the experiment was tried. And every time you try an experiment, the first time you're going to screw up, right? You're always going to underdo or overdo. And I think it's a matter of ego. They just simply admit to say, "Hey, we did the experiment, and it proved itself in theory, it proved itself in practice, but we overdid it. Next time we do something like this, we need to obviously temper it to the right constraint." But the problem is it's always an ideological battle because the bears are coming back. The gold bugs, my favorite people in the world. Right next to crypto. I don't know who I think is a bigger fool, the gold bug or the crypto bug. But regardless, those guys are always like, "See, you destroyed the economy with inflation. You destroyed the economy. You caused the greatest pain in the world." I'm like, here's the very simple fact. Okay, in a depression, you eat dog food, you live in a car. Okay. In an inflation, you have your job, you basically pay a little bit more for food and shelter, but you actually enjoy a standard of life so far superior than your view of a deflationary world where you want to destroy everything. And that, to me, given a choice between massive unemployment and inflation, it's not even a choice. It's not even a decision on my part. And I'm not arguing that we should all have inflation, but I'm just saying it's a factor of 1,000,000 times better for the general population to have inflation than it is to have unemployment.
Yeah.
The key thing that I think the reason why people feel so negatively about inflation is because unemployment only affects, let's say, 10% of the population on the individual level, whereas inflation affects everybody on an individual level. So they all bitch about it. But if I told you, okay, you can make, instead of making 100,000, you make 50,000. You will have a job for 25,000. What would you rather have with no inflation, but 25,000 for your income? Nobody would take that offer. Nobody. Okay. And I think that's sort of like the arguments that are always flying against each other on Twitter.
Boris, I can't believe how much sense you're making. And I always just kind of laugh. I laugh about it. Everyone, everyone's busy complaining about inflation. And I said, go back and read the articles in March of 2020 and April of 2020. People thought there was going to be a depression.
Do you remember? We thought we were going to have Hoovervilles. I mean, do you remember those lines in Texas for food? There was literally a 10-mile line of trucks for people just literally trying to get food because they were all laid off. Like all of these workers who were working, physical jobs, and everything shut down. And they, it was horrible. Like this, it's not even comparable in human pain on a societal level. So, I mean, again, nobody wants double-digit inflation. And the cue to double-digit inflation is obviously, yes, the tightening the monetary policy, but also expanding supply. It's like you said, it's resource constraint. We just, you basically, if you think we're going to have infinite inflation, you think we're going to have infinite resource constraint. And I think that's not true. I think, technology, you have to bet on the fact technology is going to open up resources more and better going forward. I mean, basically, the bear view is a very nihilistic view of the world, and I just don't share it.
Okay, well, we better stop and get off this topic, as people will be like, "Oh God, the MMT," and they throw up in their mouth a little bit when they hear it.
You're broad force with this MMPs. Yes, I'm a Stephanie. You're just a Stephanie Kelton fanboy. That's all you are.
I guess so. Guilty as charged. Although I am, as I say, I am disappointed that she doesn't just own up to the fact that it's
Yeah,
that they
I agree
overdid
with you.
it.
I agree. It's human ego is the most sensitive thing in the world, right? It's hard to be totally honest with yourself.
Now, speaking of being totally honest with yourself, I've always said that when you start trading long enough, you realize that you're not trading against the market; you're actually trading against yourself. And you've coached a lot of traders, been around a lot of different people. I'd love to get your thoughts on what holds back most people and what insights that you've garnered over the years in terms of what's really stopping people from going to that next level.
So it's really interesting because I'm just thinking about my next week's column. I read a weekly column, just kind of put my thoughts down. And the title of this week's column is actually Chart Yourself, Not the Market. Where, my advice is that you should forget the setups. The setups are there. There's only two setups. We all know there's only two setups in the market: continuation and mean reversion, right? Every algo, every strategy, every fundamental technical analysis just basically falls down into these things. Prices are either going to go up or they're going to revert back the other way. So all setups essentially boil down to that, no matter how fancy you put a spin on them. But you yourself, I think the single greatest flaw, and by the way, what's fascinating about this is no one is immune to this. No one. I mean, the greatest example of this is the latest crypto crash with God. Now this is the problem with getting old. I forgot who is the guys that just blew up that had the loans that were just backed up with no collateral, uncollateralized loans.
Oh, I don't know either, but everyone knows who you mean. Right? Yeah.
Yeah.
Some big hedge fund. What? Yeah, some big hedge fund.
Right, and that was but it was run by a Russian guy, of course. I forgot. Yeah. My favorite people, in terms of scamming people. But the point is, there was a huge amount of very sophisticated investors that essentially offered billions of dollars in loans uncollateralized against this. And I was listening to Ben Eifert on Joe Weisenthal's and Tracy Albert's podcast, and he was saying, why would these people who really, really know the balance sheets much more professionally than any individual make such a stupid decision? And it all has to do with FOMO. It all has to do with fear of missing out. And nobody is immune to this. It's it's amazing how because you remember in the cryptomania, when Bitcoin was 65 or 85,000 or whatever, 65,000, and of course you and I were completely out of it, and everybody was like, enjoy staying poor, right?
Oh yeah, have fun staying poor.
I can't tell you how many times. By the way, I got to tell you, nothing ever changes. I mean, the only thing good about being old is you just remember the same stupid mistakes people make over and over again. So during the dot-com era, right? Before I traded, I worked as a headhunter for a lot of for Google and Inktomi and i2 and all the software companies, right? And I negotiated something like $75 million worth of stock deals for those companies. And literally one guy cashed out. One guy. So just all that money evaporated during the dot-com. It was really like a searing moment for me. It was a great moment of elucidation about how people never ever monetize the mania, right?
Yeah, Mark Cuban was sorry to interrupt, but Mark Cuban was the only investor to do it in size.
Brilliant. Oh my God. And by the way, the single biggest bullshit ever. So the funniest thing, dot-com mania, 1999 Merrill Lynch conference. I meet Mark Cuban. Mark Cuban is writing in charge of AudioNet, which was the most bullshit little. It was basically broadcasting audio streams on the internet. It was like CB radio, right? I mean, literally, you would laugh at the value. Yahoo is stupid enough to buy him, at $1 billion, and he is smart enough to go to Goldman Sachs and say, "Sell me a wrapper." He knew right away it was just complete bullshit that he was selling them. So right away, he just locked in the value by buying puts, selling calls against it. And he got himself a collar, and literally walked away a billionaire out of nothing. It was the greatest trade ever. My total respect to him for understanding just how bullshit it was. But yeah, I mean, it was fascinating. It was just, I remember as I said, the only good part of being old is you remember all those things. But the reason I bring this up, okay, is so last November or something, during just when Bitcoin was at 60,000, we're closing down. We're redoing our New York City apartment, and the lawyer comes in. He's a young kid, right? And we're just doing the closing papers. And of course, he's a young kid, so he owns tons of Bitcoin, right? And he's got like 5 Bitcoins. At that point, the thing is worth like $250,000. And I'm like, please, I'm begging you. I am begging you to do this. I want you to sell 3 of them today. Keep the 2, but sell 3 of them today. Do you think he did it? Of course not.
It was pretty gutsy of you to do it because it's kind of a no-win for you. That's the problem about giving advice.
I told him, he could have kept 2. He could have kept them around it, but and that's basically the story of manias in a nutshell. It's basically who's it like? So today was somebody quoted a great thing on Twitter today. It said, "The problem is that I trade securities, but I am insecure." Right? I forget what the actual language was, and it was just a great tweet because it just completely encapsulates human nature. That's really human nature. We should be looking at value, but we're basically trading feelings. And it doesn't matter who you are. You're the smartest hedge fund in the world with lots and lots of quants who design all sorts of quant strategies. They're still going to be trading feelings. And that's the hardest thing in trading, is to be able to understand that's what you're doing and to walk away when you start losing control. I still work on it. I get better. You get much better to get older, but I don't think you ever master the idea of losing your shit, because I constantly do that still.
So let's talk about that. Let's explore that a little bit, because I find it as well. People think, oh, you're a professional, you don't experience all these same feelings that the rest of us do. And I always tell them, I said, no, I experienced it. Paul Tudor Jones experienced it. Stanley Druckenmiller experiences it. He tells that famous story about how in 2000 or 1999, he sold all of his stocks, and then he watched 2 young punks making all this money, and he bought $3 billion of tech stocks at the highest because he couldn't stand the fact that they were making money around him. So talk to me about, how do you recognize it? Like, are there signs? And then how do you deal with it? Do you take a break? Like, tell us a little bit about your experience.
I day trade. And as you know, I day trade like 10, 15 times a day. So very, very frequently. Yep. The bad part about it is that I really have zero long-term attention span. Okay. The good part about it is I have lots of samples. And because I have lots of samples of just my own emotional volatility during the day, I know, I have a lot of examples of when I lose. I think the hardest part in trading is not necessarily having the market screw you, but where traders always go wrong is they will make a human mistake, right? They will make a human mistake, because we all make human mistakes. Even if you're trading with algos, you'll set the algo at the wrong time and it will just go off at the wrong time, because the algo is just basically a tool. It's just a stupid machine that's doing your bidding. Right. And when you make that human, you have to differentiate between the market screwing you and you screwing yourself. And I think that the hardest part for me is when the market screws you, it's actually much easier to shrug that off and walk away and reestablish production. And, you sort of, do better. When you screw yourself, right, you compound that, because you're like, oh, I need to correct myself, which means I'm going to do a second thing that's worse, and I'm going to correct myself. And now I'm like really deep in trouble. And when I look at, all of the really bad runs, they're never because the market screwed me. They're always because I compounded the mistake by trying to correct my own original mistake.
Oh, that's so wise. And that's so true. It's like the original mistake is tiny, and then you just keep making it worse and worse and worse and worse. It's like a zit that you start picking at. Next thing you know, it's like half your face.
My God. Exactly. Fortunately, I'm too old for zits at this point. But yes, I mean, it's exactly. And that goes back to, economists, analysts, all of us. It's really, really hard to quickly admit that you're wrong and then walk away from your position. So, sorry.
It's all
I'm
right.
going to close the door here. Hopefully. If I close the door, though, I sound like I'm in an echo chamber, right?
It's all right. It's making me
Hang on.
laugh.
I'm so sorry. Hang on.
Okay.
Okay. Does that sound better?
Yeah, that's okay.
Sorry about that.
It's making me laugh. Oh, you know what? It's kind of funny because I always say, I had one dog when my wife and I were first dating, and then we got the second dog, and I always said the second dog was so much more romantic sounding than they ended up being, because they did just exactly that. They get themselves all excited and they start barking, blah, blah, blah. And just kind of, it feeds on itself.
100%. Besides the fact that, my wife loves dogs more than she loves anybody else in the family. So I'm not allowed, I'm like,
you realize
when I come home,
we got that on tape now, Boris, you're going to be in trouble.
Oh, no. She fully admits it. It's not even like I know exactly where I stand in the family. I'm like, I'm like third or fourth, after all the dogs, so it's fine. It's fine.
Okay, so let's get back to the markets here. So the inability to admit their mistake, and I guess you just highlighted the MMT people to just say, hey, look,
right.
We did too much, or the traders. So let's talk about when it hits you. Have you found any techniques to reset, to make it easier? Like I always tell the story about George Soros used to take his entire portfolio and fax it over. It was this is how long ago it was. Fax it to Goldman Sachs on a Friday night or Friday at the end of the day, close to the end of the day, and say, give me a price on the whole thing. And he would just flatten it and start from scratch. And that was his technique on kind of resetting. Do you have any techniques that are kind of George Soros like?
I still think there's just no one even close to him. Like people, let's forget all of the nonsense that swirls about him on the ideological front. Just simply from a meritorious point of view, there's just never been a greater trader than him, and that is his absolute incredible ability to be utterly dispassionate with himself. That's so hard. I heard he was kind of dispassionate with other people, so maybe that's a drawback. But being dispassionate with himself, being brutally honest with himself, certainly served him really, really well. And by the way, Druckenmiller does the same thing. The thing I love about Druckenmiller is you read this article about, I think inflation is going to 100%. And everybody's like, oh my God, we got to sell bonds. And then you come back to him 2 weeks later. He's like, oh, I've been long bonds for 2.5 weeks. Of course I changed my mind. Like the funniest thing is you never, ever trade on Stanley Druckenmiller's pronouncements, because 5 seconds later he's going to change his mind. But that is his greatest strength, because he is completely, again, also dispassionate. He does not marry his trades, and I think that's kind of the key. And I think there really is no easy solution to this. It's just training yourself. It's like doing push-ups. It's like doing walk. You learn how to less and less FOMO. I've learned to let things go. We have this rule in my chat room. We don't chase, we retrace. We always retrace. Meaning that I'd rather give up the trade and give up the profit than chase the trade. Once you kind of get into that mindset, it really definitely helps and improves your behavior. But you definitely have to have a change of mindset.
And do you find that talking to people in that chat room and you're being around other traders, do you find that makes it easier or harder to stay disciplined?
Easier. They say like the greatest way to learn something is to teach something.
Yeah.
And I think 90% of the reason why I do this is, I love working with people and getting people's ideas, and it's fun to be in a collegiate environment. But I literally think I do it really for myself. I'm just basically working through my own demons by teaching people the things that go on. So yeah, I absolutely think it's very helpful. I think trading can be an incredibly lonely pursuit if you do it just by yourself. And I think all successful traders, if they don't work in packs, they certainly have friends who are in the business, and they're always talking to them. You need some kind of a social support system, somebody to bounce ideas off of, or share ideas with, to I think really be successful in this endeavor, because it can be incredibly lonely otherwise.
Yeah,
I'm sure you probably know.
Yeah, no, I completely agree, and I think that when you look back to COVID, everyone went home. and the traders that had a Discord server where they all chatted on the phone and stuff were better off than those that were just sitting in a room alone. Maybe Jim Simons can do it.
Or in my case, because I'm a total boomer and I'm just learning about Discord, it was Slack. So
You're not a boomer, are you? I guess you are. You're a little older.
I
than
am
me.
a boomer. I literally am a boomer. That is how freaking old I am.
You must be the last one.
I am the last boomer standing, man. That's it. That should be that's the title of the story today. Last boomer standing. That's me.
But you're actually very accepting of new thoughts and new technology and new ideas. So I wouldn't say that you're like, even though you're kind of facetiously making fun of yourself.
That's what I always say, that I'm basically emotionally 12 years old. And that's the key to longevity is immaturity. That's my motto in life. I'm always, basically always a teenager. So that has served me well by basically being open to new ideas.
That's hilarious. Okay. So now let's talk about currencies a little bit. Because I found that over the last, 10, 15 years, that the currencies became the backwater. No one liked to trade them. Almost no one talked about it. Yet if you go and think about Soros, his greatest trades were in currencies. It used to be an exciting arena that people would love to trade. And now it definitely kind of got boring. I think that might be changing. Do you agree?
Yeah. I still remember, I think it was maybe 14 or 15, when there was a 24-hour period where the euro dollar literally could not move 10 pips.
Really?
I mean, I wanted to just blow my brains out, and I was watching it. It was that was the complete compression of volatility. So yes, fortunately, those days are not there. And of course, why is FX going to be? Why is FX the new crypto? FX is going to be much more volatile because FX is like, it's a bond, right? I mean, it's a short-term bond. That's what nobody really kind of understands. Currencies are essentially ultra short-term bonds with interest rates. And if interest rates go up, which of course they are, that creates natural volatility. I mean, today we were trading dollar yen post NFPs, we got long, and I was like, oh wow, I made 40 pips. And oh, holy cow, this thing went 200 pips by the time I was done. Like, I haven't seen dollar yen do 200 pips in since 2005, when BOJ used to intervene. So yes, I mean, I think it's not your grandfather's FX market anymore at all. And it's very likely going to stay this way for quite a while. Because first of all, FX as an asset class tends to just stay in one state or another state for quite a long time. It's not a kind of a thing where, it goes fast and then dies out. Interest rates, interest rate policy, inflationary pressures, very likely going to stay with us for quite a while. All of that is just mana for volatility traders in FX. And it means, we're going to see, 10-figure moves in all these assets. So it's great. It's great. If you're an FX trader now, it certainly makes it a lot more interesting and engaging.
I completely agree, Boris. And one of the things that I remember is that before the change into fiscal from monetary, meaning before we kind of went through COVID, I always used to say that eventually the volatility is going to move from stocks to bonds. And I think that's occurred. Obviously, the move is at the highest it's ever been. And meanwhile, or not the highest it's ever been, but pretty close. And meanwhile, the VIX is somewhat well contained, especially in the grand scheme of things. And I still remember that there was a time when FX vol was cheap and you could buy it and nobody cared. And I feel like that's what I felt like fixed income vol was cheap and you could buy it and nobody cared. And I feel like that's what FX vol is today. Is that the people, yes, it's gone up, but it's still cheap and we're going to get some exciting moves. And to your point, I agree completely, because now all of a sudden it used to be that monetary policy wasn't moving around very much. There wasn't that much difference. It was coordinated rate hikes, coordinated declines. And yes, at the margin, maybe one went slightly faster than others, but we're having massive changes. We're, the Bank of Japan sitting there refusing to move off their YCC, the yield curve control. And meanwhile, the U.S. is
everybody's raising 100 basis points left and right, which used to be a year's worth of rates now being done in a month.
Yeah.
So yes, it's Just the very nature of carry, right? The fact that every month you're going to get 100 basis points more on a dollar yen, yield differential. Which I mean, I'm exaggerating and simplifying things because obviously it's not quite the same thing, but you're going to get more all the
Yep.
time. Just that alone creates, massive volatility. Because what happens? What happens is more and more. It's the easiest trade in the world when it's working. Right, when it's working is the carry trade, which is just simply lever up one instrument that pays you more money and finance it with an instrument that pays you less money. It's just, it's the stupidest, easiest trade in the world when it works. And obviously it's going to attract more and more capital until it finally blows up in people's faces, as it always does. So that creates natural, I think, volatility, buying flows here.
So
I agree with you.
So we're talking about currencies and countries, and one of the things that you have an opinion about is that China. And China is a lot's going on, and I'd love to get your opinion of what you're seeing happening there, and where you think that there might be some things that people should be watching from a trading point of view.
So I'm by no means a China expert, and I'm just a tourist. I'm just a macro tourist.
You and me both
in this land.
Yeah,
right. But what I find interesting and at the same time, disturbing, and I guess let me rephrase this because before we look at it economically, I think the biggest problem with China is, of course, the same problem as it is with Russia. It's the political problem. For all of the malaise and the complaints you have about the OECD world, right? The bottom operating principle that we all live by, at least for now, is law trumps man. No pun intended. Okay, let the MAGA people. I'm not implying anything, right? Law trumps man. When you have that societal structure, you have stability and an opportunity for economic wealth, because people have a certain code of behavior. They try to produce meritorious product, and there's a way to resolve it in a relatively equitable manner, right? Once the society changes to man trumps law, once you move into a dictatorial society, and that, by the way, what is this new term, autocracy? What is this bullshit term? It's democracy versus dictatorship. Call it what it is. It's democracy versus dictatorship. So once you go into a situation where it's man trumps law, it is a guarantee of economic collapse. And trust me, I know where I speak of, because I come from the land of man trumps law. I was born in the USSR. That's how old I was. So when you have a situation where you do not have accountability at the top, you essentially build a higher and higher level of corruption, and that level of corruption, it corrodes the economic production from within. And what's happened in China, from a purely political point of view, is that post-Mao, they had this great system where every 8 years they kick the guy out, right? Like we do, term limits. They had term limits on the leader. And with Xi, that changed. With Xi, we went right back to a fully dictatorial system in China. And to me, that's the single biggest geopolitical and also economic risk. Because the moment you have a situation where man trumps law, you will inevitably have layers upon layers upon layers of corruption, and that will create unsustainable cracks in the economy. What's happening in China right now is the single biggest crack is appearing in the real estate business, which is 30% of the country's GDP, and I just actually watched an interesting documentary about this. I mean, the way they finance projects in China is, in America, the developer gets all the money from the bank, he builds the thing, and then he sells it afterwards. In China, they actually finance it out of the pre-deposits. You kind of pre-deposit on a property, and the developer uses your funds to build the property. And what's happening is, they're just running out of funds, and people want their deposits back because they're not completing their projects. And that is a very, very serious credit risk, but also obviously also societal risk, because if that gets resolved in Tiananmen Square type of situation with violence and police and things, you create just massive upheaval in the country. And I think China, everybody likes to think that China is this incredible giant, but it could be actually very, very vulnerable, very brittle from within. And that is a very serious risk. It's not a situation that anybody wants to see, because not only obviously they're the biggest producer in the world, but they're a massive economic actor. And if there is serious societal issues, then yes, I mean the easiest way to do that, the easiest way to deflect public opinion is to create a war conflict. So all of that is just kind of, I think, brewing as a. I think, to me, the biggest problem right now for the economy is not economic. As long as supply chains come back on, technology is so good right now. Technologies, we're at a level now where technology can ramp up demand almost in everything except for energy. I know energy is very, very hard, Kevin, but like everything else, we can basically plug and play and produce more supply if we really want to. But if all of that gets completely destroyed by war, then it becomes a very, very serious problem, both geopolitically and economically. So to me, that's the biggest risk right now. China is a serious risk to watch, because clearly the population is losing the biggest. China's had stability because it was this implicit contract. The CCP, the people gave power to the CCP to run the country in return for an efficient economic system. As the system gets more and more corrupt and becomes less and less efficient, and you see all of this fraud going on in the system and all of the defaults and credit risk, people lose faith in the CCP, and that, of course, gets resolved in a usually very violent manner in these kind of societies. So that's what I would say. That's my one key thing I'm keeping an eye on all the time as a factor.
It's a very eloquent rant you just gave there, Boris. So do you have your listen? I loved it. Do you have any? Does it change your positioning at all? Is there anything you do different because of the risks there, or is it just something you watch?
No, I think it's one of those kind of things where I try not. The other danger in trading is that I'm sure you know this too, is that you can overthink it. This is a nightmare scenario. Nightmare doesn't come through, right? So you can't trade your nightmare because then you'll never make any money. So I'm keeping an eye on it. Let's say I'm highly cognizant of it, and should things really, really start to change, and should we see much more militaristic rhetoric coming out of it? I mean, this whole thing with Pelosi was kind of interesting because I find right now I just think it was all a paper tiger thing, right? I mean, it was all for show. They put little ships in the Taiwan Bay. Everybody came around, but if we ever get to a point where we're actually firing live ammunition, and U.S. fleet is flying to the Pacific, yeah, all bets are off. At that point, I definitely do not want to be long the market. Yes.
Okay, Boris. One of the things I'd love to talk to you about is the fact that although everyone is pretty well convinced that we're either going to have a recession or an extremely hard landing, you think that Chairman Powell has a better chance than the market believes at bringing the ship in and actually achieving the fabled soft landing. Why do you think that?
Yeah. I think that, I think there's almost nobody who thinks that a soft landing is possible, which is generally, as you know, when everybody is on one side of the consensus, they're almost inevitably wrong, which I think is why it's actually a very probable scenario for a whole bunch of reasons, not the least of which, of course, that we still have very strong underlying demand. Non-farm payrolls today were quite good. But more importantly, I think that the reason why the soft landing is possible is because the supply side of the equation is going to come online much faster than people believe. I think one of the single most interesting mind traps that people fall into is they think, oh, it's the 1970s or it's the 1950s or something like that, which historically and analytically maybe it is. But the thing that they forget is that technologically it's completely different. I think the one thing that's really interesting, you always say, never say this time it's different, but in one aspect it's very, very different. Everything now is faster. Everything now is faster because we have digitized and computerized everything. People's reactions are faster, market reactions are faster, analysis is faster. Computers themselves now think instead of just simply act. And so the reaction time from we have no product whatsoever to, hey, let's produce as much product as we need is much, much faster than it used to be. because capital is just much more intelligent these days than it was in the 50s or the 30s. So the recovery to me on the supply side, I think, is going to be much more supportive, and that in turn creates, I think, like a much better equilibrium balance. We're going to temper on the price increases. We're going to still maintain demand, and it's reasonable to think, yes, I know we had a two quarter contraction GDP, but if this is what a 2-quarter contraction GDP feels like, hell, I'll take it every day. I don't think anybody's really in the top 40% of the population really feeling the pain that badly. So the point is, I think we muddle on through, assuming we don't have another geopolitical shock. And then, of course, it's really the geopolitical shocks that have created the economic shocks that have had this hard time. It's not the economy, it's politics. Stupid, I guess, to paraphrase Jim Carville. And of course, that's impossible to forecast. But if you assume that everybody keeps their wits about them, we have a reasonable chance for a soft landing.
Boris, one of the smartest hedge fund managers that I have the privilege of talking to, DM'd me today after the unemployment number, and he said something to the effect of, he kind of paraphrased what you've been saying, in fact, of like, wow, I thought we were in a recession. I thought this was the economy was soft. And he said, can you imagine what it's going to be like if inflation comes down in the coming year and yet there's this demand? This economy could just be flying, because let's face it.
And to his point of view, and this is something I've actually argued as well, which is companies have pricing power. They have, since COVID, they've learned how to do much more with much less. Right? I mean, it's incontrovertible to simply say that almost every corporation is running at much lighter capacity with much greater output than they were at COVID, because they've learned to digitize so many processes. And, we all learned that, 90% of the stuff we do in the office is complete bullshit. We can all do it online much more efficiently. Right.
Right.
So if they can maintain margins and demand is still there, I mean, it's just printing money. It's going to be surprising. Everybody's like, oh, the S&P earnings are going to go to zero. I'm like, no, it's going to be the opposite. They may surprise to the upside, as long as we can, as long as you can keep the whole world from trying to kill each other. We should be okay. That's the existential risk.
One of the things that I've been noticing about the earnings that you mentioned is the fact that everyone was telling me that the earnings hadn't come down enough. Remember that a month ago, 2 months ago, everyone was saying they haven't come down enough. They haven't come down. But then I'm looking at the earnings as we report all the numbers as we're halfway through earnings seasons, and they keep surprising to the upside. And I'm like, well, I thought they hadn't come down enough.
I mean,
yeah. Anyways,
I always, it's like, I mean, I thought whenever I post these pictures of lines upon lines upon lines of people trying to go try to eat dinner on a Friday night in any restaurant, even in your Applebee's, and tell me how much of a depression it is. It's you can't get into the door. It's I just think that's a big market mispricing at this point. That is an opportunity. Assuming we don't have any geopolitical risk.
So you heard it here first, folks. Boris is upset because he can't get into his Applebee's. Okay, so we've already, you've been on the show, and I highly recommend everyone go and listen to that, because it was a terrific show, and you'll learn all about Boris and his upbringing and how he became this great trader. But we had the 3 questions that we generally asked back then. We've already asked it to him, but we have 2 new ones that we're going to ask him. And so the first one is going to be the Byron Wien surprise. And Byron Wien was a strategist, and he described it, a surprise as something he felt that the market had assigned a less than 1/3 chance of occurring, but he thought had a greater than 50-50 chance of happening. Do you have a Byron Wien surprise for us?
I do. I think conventional wisdom, with President Biden being at 1% approval rating, I'm kidding, but like a 30% approval rating, is that the Democrats are going to get slaughtered this at the midterm election. And I actually think there's more than a 50% chance that they will hold the House and for sure hold the Senate. And the reason why I think so is twofold. First of all, the economy generally is not as bad as everybody portrays it to be. But much more importantly, I think um, the right the right wing of the Republican Party grossly miscalculated on the abortion issue. And if you want proof positive of that, you just need to look at this week's results in Kansas, which is an incredibly conservative, very red state, that 2/3 to a third, like massive, massive margins, voted to uphold the Constitution and basically uphold abortion rights. I think they made a huge mistake by taking the focus off economic pressures and turning it into a social issues election. And when it's a social issues election, you couldn't care less about a candidate. You couldn't care less about his position. You only care about your own personal rights. That motivates a very, very strong base amongst the Democrats. One of the things that that I also think is fascinating is if you look at the Pennsylvania race, which is right next door to me right now in Jersey. It's supposed to be like a toss-up. Doug Fetterman is literally on the Senate side is like 17 points ahead. He's got 17% of MAGA people supporting him. So you look at Georgia, where they thought Warnock was going to be very vulnerable. I think he's going to walk away with it. So you have, I think, a better position for the Democrats than they deserve to have, and that will be the surprise in the election.
And just to be clear, because a lot of people will, anytime you talk about anything about politics, people start being, getting all of their backs up. Oh. You're just saying this from a pure analytical point of view. You're saying, unfortunately, we have to trade politics because it affects the markets, and you're saying that the market is underappreciating their chances of winning. And I think that's a great call. I think that's really interesting because, as you rightfully point out, nobody is talking about that. So, if it doesn't happen, the bet is cheap. And just to be clear, actually, what do you think the bet is? Because to me, it kind of feels like it's more to buy stocks and maybe sell dollar. I don't know.
If Democrats win,
yeah.
If they just can retain,
yeah.
Because I think if we sort of have the argument here is that divided government is usually good, but it's not. It's not going to be a divided government. It's going to be an incredibly confrontational government if we kind of divide the chambers, and you combine that with the geopolitical pressures that are coming around. I think it could be just a fertile ground for instability. So yeah, I actually think you're absolutely right. It's probably from an economic point of view. Let's forget about libertarian point of view, government spending, taxation, all of those issues, which I don't think really matter because, frankly, at this point, I mean, does policy matter anymore? Right? In an MNT world, does policy matter anymore, Kevin?
Well, I would almost argue that the government has made the handoff to the private sector, and the private sector is expanding. And yes. all we need to do is the Fed to stop scaring everyone. And I think people are going to go back to buying houses, and we're going to rocket higher. And so it used to be that everyone cared about was the government going to spend. And I'm like, if Federal Reserve just tones down the rhetoric and stops going at 50, 75 bips a clip, the private sector,
1,000%, 100,000%. And by the way, to my point about how everything is faster, what happened, before now, it's probably going to change the other way, but what is it last week? We had the fastest decline in mortgage rates in 50 years or something. They went from, 6 to 5 in a matter of a week. Why? Because markets adjust. Information processing is much faster. That's my point. But economies are just much more nimble at adjusting to the facts on the ground. And that's what gives me hope for a long position, basically.
Ah, that's interesting. Yes. All right, so the next question is the Don Cox, a celebrated Canadian strategist, who used to say that you shouldn't invest based upon what's on page 1 today. You should invest on what's on page 19 on its way to page 1 tomorrow. What would be your Don Cox investment idea?
Well, so if anybody listening to this podcast is going to lambaste me before, they're going to lambaste me now even more so, because God knows I'm going to get the wrath of Tesla fanboys who are probably more vicious than any of them. But I am convinced that just like Cisco never saw its 2000 .com era highs, Tesla will never see 1,200 again as a stock. And yes, go ahead. You can start pelting me with tomatoes, dirty tomatoes now. But my argument for why, and it's not, it's not the company's actually the company. The irony of the whole thing is Cisco has been a great company for 20 years. It was just grossly overvalued,
Right.
and it could never grow back into the kind of ridiculous valuation it has, which is the exact same thing with Tesla. And I think what's happening, obviously, right now in the whole EV space is Ford is really coming on board. To me, the absolute heart, the knife in the heart, or the stake into Elon's heart, will be if the Ford F-50 EV model, which is already like going to 3 lines because they can't keep enough demand, becomes a hot seller, because it radically changes the whole idea of what a car is like, in the sense that it's not just a car; it becomes a power generating plant, right, for people who are in it. It's going to just create a massive amount of alternative choices. Let's forget about all the sedans and everything else that's coming on the market. That's going to pressure the margins. Tesla really does. I mean, the Tesla truck is a joke, right? It's something that a hipster in Brooklyn would buy as a truck, but it's not anybody that any real person who needs a truck, like a contractors that work in my house, would buy. So to me, I think the interesting story here is the next year. What's happening to the EV now that all these companies are going to bring supply onto the market? There's going to be this massive amount of supply of electric vehicles on the market. How will Tesla, work within that when it becomes just a car company instead of a fanboy company? And I think that's going to put pressure on the stock going forward. So to me, that's what people are still thinking of. The myth of Elon Musk, but I think what's going to be happening is in the next year or two, you're going to see a much more realistic, sober assessment of the whole automobile industry going forward.
From your lips to God's ears, Boris. I love it. Okay, before we let you go, you got to tell me, you were mentioning earlier that you have sworn off traveling. And now I take it you're not going on vacation anymore. You're going to do staycations in your backyard?
Let me tell you why I'm doing a staycation. Because beginning of this month, I was in Bend, Oregon, which, like, if I live in New Jersey, right, that is literally on the opposite end of the world for me, right? And there's no direct flights. So we had to, fly Bend to San Francisco. And of course, SFO is just a complete clusterfuck. So, we had the flight got canceled. I'm okay. We're going to go to the next flight. The next flight got delayed. Bottom line, the flight, like I'm already, if you know me, I work London hours out in New York, which means I'm up at 4 in the morning in New York. I spent all that time on the West Coast. So it really, really put me back. So finally, basically, I'm 24 hours up. I'm punch drunk, exhausted. We get into the plane to do the red eye, and we hit the worst turbulence of my life. And I have flown in some horrible turbulence. I mean, I've flown in Sydney Airport where the plane has to just, go perpendicular to the runway in order to land, right? And I got so sick, and it just never stopped. Like the turbulence stopped, everybody else on the plane is fine, and I'm like, ice. Just give me ice because I'm dying, right? And when I finally found my sea legs when we landed in Newark, I said to my wife, "We're not going anywhere, anytime, ever." She's like, "Oh, can we go to Greece? Can we go to?" I'm like, I'm not flying. So bottom line is, I'm in my man cave in Jersey for the rest of the summer, very happy not to even look at a plane right now.
You know what? Lena, hop on for a quick second.
Hello.
Hi. Over under on Boris not traveling for what? What do you think? 6 months?
6 months?
I'm a seller that he's going to last. I'm a seller. He's even going to make it to 6 months.
6 months.
You're probably right.
Like until January,
you're probably
January,
right.
basically.
Yeah, will he make it to January without getting on a plane? I'm a seller. I mean, he might not.
I believe it. I
don't know. He might not even make it to the end of fall. Anyways, listen, Boris.
I'll make it to the end of fall. I'm gonna. Well, I will. If I fail in my thing, I will definitely let you guys know. And so Kevin is in the offer. Lena's on the bid. I'll resolve that bet by the end of the year.
What's the deadline here?
Well, the end of fall. Whether he travels again. All right. Boris, why don't you tell people where they can find out about your services, where they can get onto your chat and learn more about what you do for a living?
Great. So the easiest thing is to, follow me on Twitter at FXFlow if you want to do that. And generally I keep it really just, Kevin knows I keep it light and I keep it economic. I don't have, ever since, the last election, I made this Zen vow that I will not make any political commentary. And I have really, really kept to it. And it's been a great person. Talk about we're talking about personal, discoveries. This has been a great personal exercise for me. So if you follow me on Twitter, you're just going to get some great, hopefully interesting economic analysis and just fun retweets of TikToks, which is my new favorite pastime. If you want to find out what I do, just simply go to bkforex.com and just come in, come trade with me every single day. I literally live trade every single day the New York Open, 9 o'clock to 10 o'clock in my chat room. And I probably shouldn't be saying this, but it's going to happen. We're actually moving to Discord. I am actually moving into the 21st century. So if you come to me in the next month or two, we're going to be in Discord and you'll be really excited. So that's what's going on with me.
Well, Boris, it's been a real pleasure to have you on the show again. I really enjoyed it. It was one of my most fun interviews I've had in a long time. And it's not just because
Kev, you are too kind.
Flattery
will get you everywhere.
Anyways, I'm looking forward. I will come to your man cave and drink beer with you anytime, buddy.
You got it, my friend. I'll even grill. The city boy in me has finally learned I have grilled the perfect hamburger. I'm telling you, everybody loves my grill now. So
okay.
I'm a master.
Well, it sounds good. I will be there for the hamburger and beer. Thanks again for joining us, Boris. Take care.
Thank you, man.
All right, Patrick, it's time for Talking Charts. Lots to talk about.
Oh, yeah. Well, first of all, let's talk about some of the data and stuff. Let's jam it all together. We were watching gold and silver. We were watching the ISM manufacturing PMI and the jobs numbers, number one. And really, it's amazing because some parts of the economy are completely showing economic slowdown, but it ain't jobs that is that's slowing down. And like talk about sending mixed messages to markets. It has most people having their head spinning, right?
Oh, today's number was just a unbelievable. Like it really was. Like it was almost like something had gone wrong with the machine when you saw the number. It was just crazy.
It could be the fact that there's elections in a few months and and there's some massaging of things.
How
to make
convenient! No, I don't know. We heard Boris talk about how strong the economy is. Maybe it really is stronger than everyone thinks, and we're messing it up. And it's really put the Fed in a real quandary because now all of a sudden the economy is getting even tighter on the jobs market, which is what we had all been watching for signs of it turning the other way. And instead of it turning the other way, it ends up being that it just accelerates to the upside, which it just kind of makes it really confusing. Do you buy or sell stocks because of that? Do you buy or sell it because the economy is stronger? But does that mean the Fed's going to have to be more hawkish? Who knows? It's really tough. Lots of
it really goes to show that there isn't a lot of excuses for the Fed to immediately pivot, which means that we may see a lot more of the same in the months to come. Would you agree with that statement?
I would agree, but I always think that everyone got the pivot wrong. Everyone talked about the pivot like the Fed was going to stop hiking and turn around and lower rates. That was never going to happen. What they did was they slowed down the pace of the rises. Yeah. And now I would say that pivot, meaning that it looks like 75 is back on the table. But here's the real question I have for you, Patrick. What if all of a sudden inflation comes in hard? Yes, it's still above target, but what if it starts collapsing? What if we start getting unders on the inflation? Should the Fed continue with 50s, 75s, and 100s? Or should they go to 25 basis points? And this has been my argument for a while, is that I think that the Fed, if you look at almost all of the rate rise campaigns, basically since 1987, I believe, they've been really stair-step. There haven't been these big, huge. 1994, they did a couple. There was a surprise, and there was a 50 and a 250s, I think, and maybe another 75. But apart from that, there's been very little. That it's usually just one meeting, And I think that we're not that far away, even though inflation is still running hot. If the inflation heads the right way, meaning if it starts to go down, I think you're going to find that the Fed is going to be restrictive in that they're going to continually tighten. The question is, at what pace do they tighten? And I think that's what we're all arguing about and where the market is having all sorts of trouble differentiating.
Right. And so certainly, I agree with all those statements. But the number two, though, let's talk quickly and touch on gold and silver before we go to the top three things we're watching next week. Now, I wanted to throw the volume profile up on this chart. And so volume profile, rather than looking at daily volume, looks at what price levels the majority of volume traded at over the time frame on these charts. And what you can really observe here is over the course of the last year or so, the vast majority of gold and silver volumes crossed in the let's round the 1780 to 1820 zone, and we just traded slam right into that. And I think that this is actually such a critical moment for gold and silver. I would have put it in the top three things if it wasn't already something we were watching this week. And that rally came right into these key levels. And to me, this is the make it or break it moment for this short-term moment, because if gold and silver if it was just a very oversold bounce and it was just a retracing move, then it will struggle here at 1800 and may come right back down for a double bottom retest of its lows and just muddle for the rest of the summer into September. Or if this is genuinely a bullish turn, we cut through the zone, and what was now resistance level becomes future support and potentially the start of a new bull. And it hasn't shown its hand yet. And so this is a very critical level. The rally came right to a critical zone, and it's incredibly important to see next week whether gold and silver can sustain price action north of 1800.
If I told you the unemployment number and I told you what the dollar did, where would you have guessed gold would
I would
been?
Down.
Yeah, I would have guessed it would have been a lot lower as well. To me, gold traded pretty well considering.
Yeah, and so we have a situation where, but you know what? We'll talk about that here right now. So let's go to the top three things we're watching next week. And the first thing I wanted to cover was crude oil, and obviously crude is on the minds of everybody. But what was crazy was just how weak oil was this week. I mean, we went from trading at $100 plus to being under 90 in a span of 5 days. And more importantly, when you use those high volume nodes, I don't have it up anymore, but you can more or less know that the large amount of volume transacted in this mid 90 range. And so the fact that oil has been so weak that it broke to lower lows is just really defining the fact that we're in the midst of some sort of a correction that is vulnerable to continue. Now, I still actually think we're much closer now to the buy zone than the sell zone. So by no means am I suggesting a short sell here on crude, but it's going to be a challenging and very messy August month, one that could potentially, if the selling pressure is right, see low 80s on a dip. But I think that the buying opportunity will come, but it's really no sign of buying now. And it could really just be a very messy August for oil before it can really base and start something more meaningful. Is there something you're watching on crude?
I don't know if I'm watching something. It's just thinking to myself, I should have listened to our buddy Marco Popic, who came on our show.
Yeah.
When everyone was falling all over themselves bullish on oil, and came in and did the big call, faded everyone or a lot of people. Terrific call, stuck with it. I saw him on Bloomberg. He actually goes on other shows and he cheats on us, Patrick. He does cheat on us, but I saw him on Bloomberg still hammering it away. I thought he was overstaying his welcome, but look, he's right again. And I don't know. I should phone Marco up and ask him when he's covering, because that's feels to me that he's got a hot hand and he's really understood what's going on here. And
listen. Let's stop for a second, because up along you're giving other people credit, but up along the top end, you were flattening all your oil positions. You were noticing that the sentiment was just so rich. so bullish that he almost always, when it's just like a sailor predicting 1 million Bitcoin, when everyone's already certain that oil's going to 200-300 and Bloomberg's got the headlines going, then you know that the trade has gotten so crowded that a mean reverts and corrects. So we're in the midst of a typical cycle, and usually corrections in primary trends last as little as 2 months, but sometimes even as long as 6 months. So we're in the middle of some sort of multi-month correction that I still feel very strongly will resolve itself bullishly. But really, it's about allowing the correction to play out and then being tactical enough to recognize when the next buying opportunity has begun. And that's something that we're going to be watching on the Huddle in the weeks and months to come, right?
Well, you were very kind to me, giving me props for selling it, but I bought it way too early, and I should have listened to my buddy Marco. Okay, number 2, what are we watching here? U.S. dollar.
U.S. dollar, and obviously the jobs number turned this right back up. But the low actually came in earlier in the week with a bullish engulfing candle coming off of, using some technicals of what were previous highs, acting as support into a Fibonacci retracement zone. This is a very typical flagging wedging formation that is attempting to bullishly break out. If I pull out a really thick crayon here and draw this line, you can see that this wedge is attempting to bullishly break out. If we start seeing north of 107, 108, that could really set in motion another leg higher in the dollar. So you want to say a joke? I can hear you laughing, so go for it. What? Go ahead and rib what you want to say.
No, you know me too well, buddy. It's just that was so good. Like, it was, your technical talk there was just so, just so hot. Like, it was, it was like, if you were inclined to get excited by technical talk, that would have just been
were you getting a little bit excited?
I don't, because I don't get excited by technical talk, and I didn't understand half of it anyways, because there was too many wedges and Fibonacci zones. But it sounded so impressive. And
thank you. I appreciate the kind words, Kev. Let's move on. But I wanted to just highlight the euro. Unlike other currencies, the euro throughout the last 3 weeks has actually failed to hold or make any higher high, other than the quick little 3-day burst it had off of a parity level. It just shows that there's still heavy distribution coming in on the euro front. And while the yen, I think you were very eager to get hit on the short, and I hope that you took some profits. But
no, you know me, I'm an idiot. I'm still.
You're still in. Well, what were, again, previous highs acting as support right into a fib zone, getting a good bounce. It'll be really interesting to see when you do almost all the major currency crosses, right? Whether the pound sterling on their rate hike and a recession prediction way it's rolling over, or whether you look at the Canadian dollar rolling back down or the Australian dollar rolling back down. It really now it looks like it's setting up where the typical behavior of U.S. dollar up and all cross currencies down is lining up again. And maybe the yen had a larger move, but it'll be really interesting to see next week whether or not we see all cross currencies correlate, and whether this becomes a dollar move or not. That's at least one thing I'm watching. I don't know whether it will happen, but that's the thing to watch next week.
So if I come to your little chat rooms there and talk and listen to you, will you tell me when these currencies are coming into, let me get this right, major support into Fibonacci zones?
Yes.
Because I should have done that. I should have been in the big picture trading.
You should have been. Okay,
and then I would have known.
The shameless plugs. I would
have known, but I would have known to cover. And I'm not. And listen, honestly, I was thinking to myself, you know what? Patrick really should have given me the heads up about covering.
What kind of a friend am I? Like a piece of shit, right?
No, but that's my own fault for not coming to your seminars.
You could have just even.
It's like kind of how like you
read the notes at the front of the email that comes into your inbox, right? Anyway, just
I just because you don't read mine, I don't read yours.
That's the courteous thing we do to each other. That's the way. We don't want to poach each other's ideas. Then we goocher everything. It's like we have to maintain the beat of our own drums.
It's like the wall in investment banking. Yeah. There's a wall that we have to have for our ideas.
Absolutely.
Okay.
Absolutely. All right. So number one, the inflation numbers next week, right? And this is going to be the second thing, because with jobs numbers coming in hot, will we see that this continues to muddle the picture. Like, are we going to continue? Like, obviously, commodities have been off their highs. So there's lots of underpinning roots that could have things cooling off. Not necessarily a big drop, but like the rate of change higher and this really high print. Maybe it might just pause a little bit here. I'm dying to find out.
Yeah. I'll give a little shout out. I won't say his name because I don't know if he wants me to, but there was one of my subscribers. He was very knowledgeable, like short-term trader, and he was highlighting how Powell was talking about inflation, and he was focusing on headline inflation. Yeah. And I think, and he was speculating that Powell knew exactly what he was doing on headline inflation, because headline inflation probably will come in a lot harder, a lot quicker than core inflation. And if you wanted to focus on something, we could see headline come in. But Patrick, what if we're wrong? What if inflation just
rips?
Yeah.
Yeah,
I don't know.
I mean, look, I think it would scare the shit out of everyone, because if you got a jobs number that's coming in the way it did, and you have inflation running as hot as it is, it means that the Fed's got to do more. I mean, I think that it would actually quickly scare the shit out of everyone.
But what do you even do with that? Like, if I gave you the number tomorrow, and I said to you,
well, I wouldn't take the number alone, but I mean, let's be realistic. The S&P 500 has, okay, let's talk charts. Okay, let's move on, and let's answer that question with an S&P chart, right? So S&P 500 has now been rallying from it put in the lowest print came in on June 17th, and since then, over the last 49 days, so over the last almost 2 months, it's been a 15% 500 S&P point rally off the low, and we're coming right to a critical level where all the previous lows and highs are right there along this 4,200 level, now that doesn't guarantee it's going to reject, but I would at minimum say that the asymmetry of the opportunity is gone, where with 500 points behind us, what is there, maybe a couple hundred points at best in front of us in this market condition, and therefore there's almost no asymmetry in going long. And if that number comes in scary, I think it could begin the next sell cycle. It could easily reject 4,200 and sell us right back to 4,000, and we'll be right in a situation where there'll be a lot of people that are going to get really nervous. Now, I'm not saying that number is going to come in scary, but I wouldn't be shocked if the market reacted that way, if it did.
I saw this great study, and I don't know who it was by. I should really go and grab it. But this fellow said that if we are in a bear market, there has never been a correction that within the bear market of more than, I think it was 50%. And he took the 50% correction. Can you do that for me? Can you tell me what number that is?
Well, of the entire move, the 50% correction is 4,200 right here.
No, like from the move from the highs?
Yeah. Well, yeah. Like,
what is it exactly?
We're 4,800.
Yeah.
Like, just think of it. So the drop from the top to the bottom was almost 1,200 points. We're rounding, right?
Yeah.
So a 50% retracement is 600 points.
Yeah, but what's the exact number? Because I think he was saying that it's slightly above, and then if we get to that, it's like another 50 S&P points, right?
Yeah. So the exact 50% retracement number is 40. Well, not exact, but it's 42 and a quarter, 42.30, something like that.
Yeah. So that was his. I think he said 42.30, 42.31, and he said if it goes there and it will no longer be a bear market, was his argument, because at least if history continues to be the guide. Because his argument was that we've never had.
I get the 50% number, but there's a more important one, like the fib zones in terms like 60%. Like, I look at it.
Patrick, it's not technical. He's saying that if you go to history and you look at bear market
rallies,
there has never been one that's more than 50%. Then it wasn't a bear market, and it was or it went on to new highs.
So just to use an illustration that he might be referencing. So let's go back to 2008. Again, we're not saying this is 2008, but let's look at that bear market. So back over here, off of that October 2007 high down to the low that ensued in March of 2008 was this 160-day 20% market drop, right? And it was about 300 points. And and from a Fibonacci retracement or like a 50% retracement zone, it's slightly violated the 50%, but you can see it went to 1420 where that 50%, the middle of that zone is.
Yeah.
So it temporarily did close above the zone, but the point is that it's a typical retracement, which is whatever the initial impulse move down, you have a retracement that often retraces half of the previous gains. That's like even Dow theory. That's basic. That's like the basic trend analysis, right? And so we are definitely approaching that level where I would say that we have the easy gains are all rear view mirror. And there is room for it to poke a couple of times higher here. But, if you're going long here, it's like unless you think it's a new bull market, it's a bad place to enter.
Oh, I don't disagree with you there, Patrick. I'm not trying to say that because I do think it's funny that like a couple 100 points ago, everyone hated it. And now people are starting to like it. And
well, that's typical, right? Like that's actually a sign that it's about to turn. Is that when everyone buys in? Is Kramer bullish?
I don't know, but my question to you is, Patrick, if we traded all of a sudden we were 4,300 and we were there for a week or something, would that make you bullish?
No.
Like at what point would you be like, okay, maybe this is more than just a bear market rally? So let me put it this way.
I actually would even say, look, it would take a move to 43.60. About a 700-point rally. This is what I would love to see. It rallies another 200 points, pokes above there. So every one of these media CNBC places, it's 20% off of the lows. It's a new bull market. And everyone goes on parading on freaking FinTwit and everywhere else that it's a new bull market. And then the rug gets pulled out right underneath. Like that would be the sentiment flip-flop. That would be like an epic fade. Now, I'm not saying it's going to happen, but I'm just saying if that happened, I think that would be a layup.
All right. I can't argue with that. I like it. You're fading the views.
Yeah.
All right. Okay.
You like the contrarian.
I do. You know me. I like it.
Anyway, just a couple quick little things to highlight. Nat gas. Now, personally, this little drop and pop has just solidified that truly natural gas is the widowmaker. The fact that it could wipe out 50% of its value in 3 weeks and then make it all back the following 3 weeks is insane. But it is what it is. But the one thing is that I know this really smart guy I do a podcast with that says there's no such thing as a triple top. And now we had a double top. And usually what happens is that in the spirit of that 50% retrace, now that nat gas has bumped its head, if this pullback stays above $7.5, $8 in this zone and rolls up and heads back to the highs, is there such a thing as a triple top? If not, this thing's going $11, $12 if that happens. This is a really interesting place to cherry pick nat gas around the $7.5, $8 level to see whether it goes for another go at the highs.
Yeah, listen, I hope it does. It's wild, but
did you buy your strip back?
No, I didn't buy my strip back. I'm trading the stocks.
It's definitely going up.
It probably is. You're absolutely right. You're absolutely right.
Just touching copper, it would be interesting if under conditions that we saw 375 to 4, but really at this moment, so oversold that it's just like the stock market going higher. It continuing a little bit higher is the path of least resistance. But really, to make a bull call on coppers, you have to really think we're on the other side of this economic cycle. And so I think that even like we made the call on gold, I think if copper still does even go higher, you have to still consider it a reasonable risk. It's going back for a retest of its lows during another market weakness cycle. But probably then I would start really focusing on where the buying on dip opportunity emerges. Because in the bigger picture, commodities are in a bull market and secular bull market. And so this correction has been awful. It's been painful. It's been washing everyone out. But there will be a buy on dip at the end of this. And, seeing where the cycle plays out in the next couple of months, there's big money to be made if you can sort out when the trend has actually shifted.
Patrick, I got to go back to nat gas for just a quick second.
Okay.
Our friend George, GeoFed on Twitter, he said something to the effect of, I seriously don't know if it's possible to learn anything at all from trading nat gas. It's evil. And I kind of laughed about that because it is evil. It is a little difficult. But then Jimmy Jude jumped in there, which is the funniest part about this. I learned that putting a rag soaked in ether over an oscillating fan at night still didn't help me sleep when I had a big natty position on. He's got away with words, doesn't he? Oh, he's just
That's
so
awesome.
good. Yeah, big.
We got to have him back on the show.
Well, listen. For those who don't know, Jimmy has got an open invite. He's Jimmy though. He does it when he wants. Like I don't bug him because I don't want to be bugging
when he's
him.
ready, he knows he's got a spot.
Exactly. He's ready. He does it. He's got a grand life plan. I'm convinced. No, I'm convinced this is all part of the master plan. He knows when to come on and stuff. And he knows that he's open invite. He comes anytime he wants.
There you go. All right. Just let's leave it with the uranium participation unit. And we're such an interesting moment between this 14 and 15 zone right in here. So it's attempting to bull breakout. Attempting is the key. So you could draw the trend line and know that essentially we've now bullishly started to roll up. But to me, it needs to legitimately clear 15 in order to solidify that a new bull trend is underway. Otherwise, it could still fit the characteristics of a retracing wedge. And watching whether or not uranium participation unit, whether this spot can actually make a proper breakout of 15 next week is going to be on my mind. It'll be really interesting to see. Even the chart on Cameco looks a lot like this as well. Be really interesting to see if this uranium market actually gives a little bit of a bullish shift.
All right, that's it for talking charts. Let's go on to our skin in the game. What does that do? Is that because I told you sounded sexy when you talked technicals?
No. All right, buddy, you clipped me. But you know what? Look. You were the one that was ridiculously bullish, home builders, and I didn't want to give you an over-under at flat, and so I had to give a little bit of a clip to just make sure that.
But you mispriced it. You mispriced it.
I mispriced it. I did. There's no doubt about this.
And you mispriced it, and I hit that bid. I was like, "That's the wrong price." Boom. And you don't like it because I went against what I wanted to.
I'm not happy.
Yeah, but it's your own fault for mispricing.
I even raised it. Like, Lena, did we raise that to like 4 points?
I think it was 5. I think I ponied up.
I'm pretty sure it was 5.
Yeah, there you go.
Okay, so that means what you're beating me 11.
Yeah, do we know the score?
Yeah, well, it's 3-6. I think it was before this 5 points.
So it's now 11-3.
It's 11-3.
Oh, geez, this is good. This is restaurants getting closer.
Yeah,
okay, I better tell people about it, though, first of all. Yeah. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode. And listen up, folks, we've changed the rules, although people know that now. We're going to play a match to 50 points. The loser of the match will take out 3 lucky or unlucky, depending on how you think about things, Market Huddle listeners for a dinner where they grill him about why he had so many bad calls. Every week we can bet between 1 and 10 points. Once someone hits 50, they will win the match, and the loser needs to start figuring out restaurant reservations. Lena is somehow going to pick the 3 Market Huddle listeners randomly. We'll figure out those details as we get closer, but the pool will definitely include those listeners submitting questions for No Stupid Questions and those sending us side effects. All right, Patrick. So it's my turn.
Yes, it is.
I got to think. I haven't actually came up with something, so I'm a little bit, you know what we're going to do? We're going to do, let's do the yen.
No.
You know what? Let's actually do euro. I'm going to do truly one that I don't have as much a view on, and I don't want to gooch for my own yen position. So I'm going to do
this
euro.
Is the euro FX where one spot 0180.
Yeah, and I'll give you straight up or down.
Down.
All right. I'll give you, if you want to do another 5 and try to make it back, I'll do it.
How about 6?
Oh, you're on. All right.
All right. You know what? That inflation number is going to decide this, but let's see. All right, 6 points, up or down. Lena, the level is 1 spot 0180 for the purposes of tracking.
Things getting ugly.
Oh,
6
You
points.
know what? If you get that, I mean, that's going to be 17-3. I'm going to be humiliated if you start getting that.
Yeah,
kind
you
of
should
spread
have.
on me.
You're playing catch up. You should have just
Somebody's
I
out
don't
for
know.
blood.
But when you give me something that has that I have a clear shit,
a clear
I'm
edge
gonna
on.
lose.
Oh, I love this.
Shit! I just I'm screwed now.
Because you know what? That's a very inefficient market, and there's millions of speculators making the price all the time. But you know what? Patrick knows better.
the trillions that exchange every day.
That's right, but
Patrick knows better. Oh, please, Lena, save me.
Okay, let's go.
Stupid
It's
questions.
point of no return. We've gone way past the point. So it's okay.
All right, Lena.
So the first question. Hi all, I'm curious how you think about and evaluate consensus positioning. I like to think that I have curated a list of people, podcasts, and newsletters that represent smart minds that tend to be right more often than not. But it also means that the contrarian in me hates when all those smart people agree because it feels consensus. This frequently causes me to misread the consensus positioning and exit trades too early. Obviously, there are a lot of different ways to manage that risk and try to stay in positions longer, i.e. option strategies, trend following, etc. But I am mostly interested how you like to evaluate something like the consensus position, something soft like Twitter trolling, or something more tangible like caught reports, or something totally messed up like drawing lines with crayons. Just kidding. I love the show and look forward to it every week. Thanks.
Well, listen, Kev, I'm going to start this one off because, first of all, consensus amongst the pros that you like is different than the consensus of the whole street. But there's one consensus that has worked for me so perfectly, and I'm just going to do the call out is I have a simple thing that when 3 friends or family call me about something, like for instance, they say, should I buy Bitcoin or should I think like that? Immediately, we're within 24 to 48 hours of market high. It works perfectly.
You're talking about non-market relatives.
Non-market friends and family that just hear about stuff and they know that I'm involved in this
and you
stuff.
need 3? You need 3?
I need 3 because one random one is not a large enough sample size.
Okay.
3 is not a huge sample size, but it's enough to know that everybody at the cooler is talking about it.
That's a great
so
answer.
by the time you hear it from me, it's time.
Yeah.
Well, you might be one of the 3, Lena.
Yeah.
But that one works for me. But I think the one thing to just say to this listener is that it's important to try to gauge what the sentiment of the broader street is, because that's where the real money is. Like just because a few of those people that understand it and follow them on Twitter may not be enough to be a representation of sentiment, but sometimes it is, right?
Yeah.
It's the one thing that's for sure is the sentiment continuously gets more and more bullish the more and more money people are making, and so you can usually feel the white heat in a market that's making big money, that you know that things are getting a little bit overdone. What do you look for on those?
Well, first of all, I sympathize with this listener because he says the contrarian in me hates when those smart people agree with me because it feels consensus. And as you know, Patrick, I've been pretty honest about this. I struggle with it. Like the moment people started agreeing with me, I'm like, I got to get this straight off. Like I'll buy something, and if it's like when no one does it, like it's like I keep talking about Marco Papich's trade. It's because I should have been doing Marco Papich's trade with him because it was exactly the kind of trade that I love doing. It's that everyone loved oil, everyone thought it was going up. There was absolutely no reason. It was difficult at least to imagine reasons why it would go down. Yet the position that it wasn't going up, and so now all of a sudden people, let's just imagine I'm Marco Papich. I was smart enough to go and do that trade. I'm short oil, and then all of a sudden a few people start agreeing with me, and I give up on it too early. And I struggle with that all the time because I like being completely alone. To me, it feels okay to be like, no, really, like when people are telling me I'm an idiot, like it's fine. And I know other people that we have on our show that talk about using Twitter that way, and they'll literally go and they'll tweet something out, and when everyone is busy pushing back, telling them there's no way, they'll go out and they'll double their position. Because they realize that is sentiment. So the question is, the question is, how do you judge this? And he gave a couple of examples of different ways, and I would say all of them. And there is no one that is going to be the correct one at the correct time. Sometimes it's the commitment of traders. For example, the stock market. I've been saying for a while that this is the most bearish stock market that we had been, or at least up until a couple of weeks ago. And all you had to do was look at the AAII survey, and you could see that it was actually more bearish during the last month than it was during the COVID pandemic. And you could see it right there. You could see it that the actual respondents were more bearish at that time. There's a great survey, that the Bank of America one, that I really like. This one. This is an institutional survey, and it's a little more formal and goes through it all. And they'll actually, if you can ever get your hands on this report, it's worth its weight in gold. And I just love it. And Patrick, I'll tell you, whenever I see the kind of most popular trade, and I look at the evolution of the most popular trade, or the evolution of the thing that people are worried about, I just say that's the fade. Whatever it is, the number one thing, it's the fade. Whatever they're worried about, you just fade it. And by the way, right now it's inflation. It was the war was, a month ago was the war was the number one worry, and that ended up being a fade. You could argue that maybe that was oil. Oil was a fade because of the fact that in the Bank of America, position report, the thing they were most worried about was war. Anyway, so the long and short of it is that there's lots of different things. Just start using them all and put them all into your tools of the trade. And that's what I would say to you.
So for me, I'll just wrap so we can go to the next question. For me, one of the things I do, and why I anchor so much off of technicals, is when I build my trades, I often not often, in almost all situations, I know where I'm going to be wrong, and I also typically try to define where I know where I'm going to be taking profits or where I'm targeting. And by having that framework already established, it gives me the action points where you don't have to rely on trying to fish of the whole market sentiment. When you've made the right risk-reward payoff on your trade and it's there, it's time to lock in. It's time to act upon it, and you're not relying on things like how does everyone feel about the trade to make that decision. It's just my view. Anyway,
can I just leave it with one last thought from a trader, much more wise than either one of us by a factor, exponential factor. Bruce Kovner, he says, what I'm really looking for is a consensus the market is not confirming, meaning something that everyone believes in, but that the price action is not confirming. I like to know there are a lot of people who are going to be wrong. And I think that, like going back to Marco's oil trade, that was a perfect one. Everyone was bullish. Everyone in the stock and the oil was actually not going up anymore. And that's a great way to think about it. Okay, next question.
Hello all. Do any online brokers in the US and Canada offer trading in European futures? I'm trading mostly long bonds and natural gas, while the major European bonds seem to show a definite in parentheses, positive correlation with U.S. treasuries. It is well known that the natural gas markets in Europe are currently like an alternate universe. It may be late in the game now, but for future reference, are European futures, especially nat gas, available to North American traders? Thanks for all the great work. And while I do enjoy, and respect Kevin and Eric Townsend, Lacey Hunt rules. Keep the faith, Patrick.
Patrick, is this your burner account?
Sorry?
Is this your burner account?
Yeah, actually, I probably emailed it with a secondary email. But I won't. All right, Kev, give it a shot.
Well, so there is it's a great question, and I guess we should have researched this a little bit better, Patrick. I forgot that this question was in there. So I don't actually know if that's available to North American clients, but I will say something that I am aware of. That just because there's a futures product listed on the European exchange, it doesn't necessarily mean that we're able to trade it as North Americans, and especially as Americans, because we're Canadians, so we have a slightly different rules. And I believe it comes down to whether the product is okayed by the CFTC or something of that nature. And the long and short of it is, I know that when I wanted to trade long-dated Euro stocks calls. Like I got in that trade when I was all hot and bothered to Harley Bassman about those negative
interest rates and everything.
Right. So when I wanted to trade those, I know that my IB couldn't do it. And they said, in essence, IB is an American company, and because this product is not registered by the CFTC or whatever the reason, you can't trade it. And so I had to go open an account with a Canadian firm that would clear through a French bank. And that's how I did it. So there are definitely, it is complicated. There are definitely different ways around it. And so one of the things you should be aware of is that it's not as easy as just saying that you can or can't trade it, because as I said, I couldn't trade it at IB, but I could go trade it at my French bank that cleared, in Canada. So there are ways to do it. And I would agree that we're probably going to see a lot more excitement in European gas trades, and we should all be going in and looking at those things and trading it. I know that it's easy to trade like boons and for example, the Eurostoxx 50 underlying futures contract, but for some reason there are ones that aren't allowed. And if it's not available through IB, then I would suggest going around and trying to alternative ways around, maybe opening other accounts. And if anyone knows, please tweet it out for this listener so that we can say, oh yeah, you can trade this here, and please let us know.
All right, Lena.
Alrighty. Hi, thanks for the very entertaining podcast. Always good to hear some Netflix and beer recommendations and maybe some trading tips as well. I have a question to Kevin and Patrick. Where do you look for information/research for the equities you are looking to invest to? Some websites, Bloomberg Terminal, podcasts, something else. By the way, talking of thick crayons, have you seen any chart from Jeffrey Snyder? Patrick, you need to step up your game with crayons.
That's a pretty thick line.
Like, what is with his charts? Like, they're so big. Like, does he have an eyesight problem? Like, Eurodollar University, and he literally uses crayons.
Yeah, but I think if you made them thin and just made it like a mountain, like the bottom line, you can see the contrast, right? Anyway, it is a very thick line. He does either. And
you know what? It's a shtick. Like, at this point, he can't go back.
Thing. Yeah, it's his thing. Like he can't go and start changing his.
It's
chart.
It's like Phoebe Bridgers. 1 second, Phoebe Bridgers sang about Ryan Adams. Who a long story there, but she said, "Why do you sing with an English accent? I guess it's too late to stop now." Like, you can't change. Like, at this point, everyone's going to go, "Oh yeah, you changed your crayon size because they talked about it on the Market Huddle." You can't do it. He's committed now.
Yeah.
Yeah. Anyways, what were you going to say? Where do you find your stuff, Patrick?
Well, look, you know what? Unlike you, I am Bloombergless, just to show
Bloomberg. A man of the people. You're a man of the people.
A man of the people. It's Koifin does a great job. That's a great site, by the way. If you want some great information, but I find that you can get a very good landscape picture through things like TradingView and other things. I do almost all my intermarket analysis top down through just analyzing all the different markets, and you can get access to all of them through TradingView. And so it gives me a very good landscape on that, and I am able to kind of use a top down approach to kind of look at what baskets of stocks I want to look at and things like that. And so I just have my own way of doing it, and that's the way I approach it.
Yeah, and I would say that, like, I love my Bloomberg. I've had it forever. I've probably paid Mike way too much money, but I use it mainly for information. In terms of actual ideas, it's pretty limited. I find that I get more ideas from things like a Seeking Alpha, or someone writes a really interesting blog, or a million different ways that you just kind of pick away at your list. Like, I can't tell you the number of things I get sent there. I'm like, oh, this guy writes this thing, and it's like some weird off the run security, and he'll write maybe once every 2 months, and a buddy will send it and go, oh, you know what, this guy sent me this thing. So one of the things that I would suggest is try to make friends that are of similar interest to you in trading, and just share information and talk about things. And Seeking Alpha, I think, is a really good one. Talking Markets, just things of that nature that you can go and get ideas of other people that are sharing those sorts of ideas. Anyways, Lena, why don't you tell people where they can send their questions?
So if you'd like to ask any questions to Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
All right. Thanks for tuning in to the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter. You know all the things. So, Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna and follow me at bigpicturetraining.com. And Kev, where can they find you?
I'm on Twitter at Kevin Muir, or you can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market, we're just happy to spend some time together on this crazy ride. So now stick around for the after show. Okay, Patrick, give us the beer review.
I'm struggling because, to me,
It hasn't turned into wine yet?
No, it hasn't. I was waiting for the wine taste to come. No, but it is as straightforward Czech lager as you get. It's
You've tasted more than one Czech Pilsner?
Oh yeah, absolutely. Sorry,
He's an international man.
I don't even know what he's
I,
drinking.
yeah, exactly. I'm like, I fucking say lager.
Yeah,
I'm
it's
drinking
like
a Pilsner.
water.
It's
a Pilsner.
no, it's anyway. But you know what? It's a nice, clean drinking Pilsner that is what you would expect to get if you walked into a pub in Prague, right? Like, it's clean down the middle. I can't give it an amazing score because it's down the middle. I would say 7.5. I'm just going to give it a right down this middle score because it's very drinkable. It's clean, but I wouldn't want to say it stands out in any way. It's one of those ones you'd be just drinking at a bar.
Lena,
Yeah.
I was just thinking about this while he's giving this straight up down the middle review. I know you love Bill Burr, and I saw he went with Dave Portnoy and he did a pizza review. And
I gotta go see that then.
Yeah, and he went lower than Dave Portnoy, and then he wanted to change it, and Portnoy wouldn't let him. Pretty funny, actually.
I'm gonna go see him when he's in Toronto.
Oh, are you going to actually see him? You know what? There's some sort of comedy of thing going on in Toronto. I saw it in the subway. Like Amy Schumer's there and a whole bunch of people. Is he part of that?
No. He's coming for his own stand-up, like late August.
Oh, okay. That's great.
Yeah.
Oh, you know what we got to talk
excited.
about? You know what I'm doing this on Wednesday.
Oh, please do tell.
I got to tell you. Okay. So, you know Morris and his stupid fish?
Yeah.
Are you going to a fish concert?
I'm going to the fish concert.
No.
Get out of here!
Yep.
Are you and Morris gonna bike
Well, no, Morris
there
is
in your,
this
in
is
your
the
mammal outfits?
This is in Toronto, so he won't.
Oh, okay.
He's like they won't let him over the border probably. But
Oh, okay.
yeah, I'm going to fish. So the question was, I was like sending Morris notes and was like, okay, how high do I have to be for this show? Because that's no, seriously.
Where you can't look down.
Are you gonna like gummy it up?
Gumming it up. I don't know. But I just laughing about it. And then I was sending him this thing about there's this Reddit thing about the guy wrote, I just took 2 500 milligrams. I'm like, listen, I'm not
Milligrams,
I'm not a pothead.
probably.
I'm not a pothead, so I don't have a clue what this means. 2 and 500 milligram gummies. What do I do?
You do nothing. You're like
And the guy says,
Find a safe place.
Yeah, the guy says basically go outside, grab hold of the grass so you don't fall off the earth, and enjoy it, man. I thought that was the greatest line ever. Go outside, grab hold of the grass so you don't fall off the earth.
That's a lot.
So anyway, is that a lot? I don't know.
I think so. I'm pretty sure that's a lot. Yeah.
Because there are gummies that are like 10 milligrams and shit.
Oh,
like that.
really?
Yeah, like 500 milligrams I think is a lot.
Yeah, no. I think this guy's going to die.
Like you would you'd
That's
pass out.
So that's what Morris sent back. He said that guy's going to die. Like so really, you know what we need to do? The Market Huddle community should weigh in on what happened to the guy that took 2 500s.
Please go try out 2 500 milligrams.
No,
gummies and let us know.
No, do not recommend this to anybody.
Just kidding.
Anyways,
Wait, so hold on. Is this like a fish only? Like it's their concert, or are you going to some sort of a festival?
No, it's their
fish-
concert
oh, okay.
only. Yeah, no, it's their concert only. I'm going to be going.
Who
So
are you
I'll
going
report
with?
back. One of the buddies at work.
Okay.
So
are you gonna be like fanboying
I want
by yourself?
You want picture? Oh no, I was thinking of going alone. I was like, oh, maybe I'll just go get a single.
where are they having the show?
At the what's the one down in the like it's the old Ontario place. What's that called now? Budweiser.
Oh, Budweiser.
Yeah,
my God,
it's like there's like lawn seats and stuff. But I didn't get
It's
those.
outside, right?
Yeah. Yeah, no, so it's going to be fun. So I'll report back.
Make sure to put sunscreen on your head.
My bald head, yeah, for sure. No, I'm under the thing anyways. I'll be okay.
I'm a bit of a sunscreen officer.
But Lena, I'm pretty sure it's at night, and I don't need sunscreen at night. But then again, I don't know.
Oh, if it's at night, okay.
It's not like it's on a Wednesday. I'm not taking time off work. Like,
well, I don't know.
Like it's afternoon
the
baseball.
sun doesn't go down until like 8:30, 9 o'clock now. I don't know if it's like
Lena, I'm very kind of you to worry about my big bald head.
Sunscreen and skincare is very important,
Okay, on that note, everyone, have a great week, and we'll catch you next time.
Yeah. Thanks, everyone. Have
Take
a great
care.
weekend.
Bye-bye.